For those of you that don't know, about 6 months ago, I bought my first rental property in the middle of the ghetto, right at the peak of the real estate market. So I just wanted to give you a little update on how that's been going so far. All right, I'm just kidding. It's not nearly as bad as I just made it out to be, but on a real note, I do want to give you an update on, how things have gone so far and some things I've learned and, how I would go about investing in real estate differently as I move forward. Buying rental real estate has been a big goal of mine for a long time now, and after a lot of work and planning, I was finally able to close on my first property in Memphis, Tennessee on the 12th of October 2022. One of the first things that was really cool about buying this specific property was that I paid $185,000 for the property. I didn't buy it outright, but that's the purchase price that I ended up getting on it. And the property did actually appraise for $195K, so obviously that's good news. Whenever you're buying a property, it's nice to see that the appraisal comes in higher than what you paid. So that was kind of, a perk right off the bat. So I bought the property from something called a Turnkey Company. I've explained this in a lot of my other videos, but I'll kind of give another short explanation right now for those that don't know. A Turnkey Company is essentially a company that fixes and flips properties. They'll buy a distressed property, fix it up to, move-in ready condition and sell it to investors. And most of the time, these companies will also have a property management, section of their business. So it's just a really streamlined way for, investors who don't have a lot of time on their hands to get into the game of rental real estate. You buy the house, it's ready to go. They find the tenants for you. They collect the rent and give it to you. They handle repairs. So, that's what I ultimately ended up going with for my first property. After I closed on the property, it was basically just kind of a waiting game, because I owned the place now, the property management was in place, and all I could really do was kind of wait and check my emails to see, if they were getting any applications. And I was just kind of keeping my fingers crossed, hoping obviously that they'd get a tenant in as soon as possible. So as I'm having some correspondence with the property management company, they're letting me know they are getting some applications, but the thing is, a lot of the applications are getting rejected. This is kind of good and a bad thing, I guess, because you definitely want your property management company to be vetting the tenants enough to where they're not just going to let somebody has a bad track record move in there and, cause you problems down the road. Like, it's definitely better to wait for the right tenants than to just kind of rush and get the first one in there that applies, because it's going to cost you a lot more in the long run than just waiting an extra month and finding a good tenant. The target rent for this property, meaning what we thought it was going to rent for, was going to be $1,350 a month. So I was getting a little restless. I was going back and forth with the property management company, and they kind of threw out the idea, hey, maybe we kind of priced it a little bit high. I think we'd have more luck if we lowered it to $1,295 rather than $1,350. I was kind of reluctant to do this since, my, all the calculations I had done to figure out, what my cash flow is going to be, kind of the return on the investment. I was only, expecting to make about $60 cash flow a month. So if I was going to decrease the rent by $55 every month, that pretty much would already take me to the point where I was breaking even. So it's definitely something I didn't want to do, but the thing that ended up happening, and I guess this is another perk of buying with a turnkey company, is so, they're the ones who projected this rent. They're the ones who kind of gave me my estimated returns. I definitely double checked them myself, but, so I go to them and I say, you guys said, you guys know this area better than I do. You said the property would get $1,350 in rent. And now, your management division is telling me I should lower it to $1,295. So luckily, they said, okay, you're right. Maybe we were wrong about that, and we want to make it right. So for the first year, we'll actually cover that $55 that you're going to be losing on the rent, and that way you'll kind of have the best of both worlds. You'll still get $1,350, but it'll be lowered to $1,295 for the tenant, so it'll kind of increase the likelihood that you're able to get somebody in there quick. So finally, I got the great news that some tenants were finally accepted, and they were supposed to move in on the 6th of December. This was pretty cool because my first mortgage payment was actually the 1st of December, so it only would have been like 5 or 6 days that the property was empty, after I had paid that mortgage. So that would have been really cool. There ended up being a little discrepancy where the tenants didn't actually end up moving in until the 29th, I believe. It was something about them not knowing, how much of a security deposit they were supposed to have ready before moving in. So that was a little bit of a bummer, but I did calculate, I did account for vacancy as, you definitely should when analyzing rental properties. So it's not like I assumed that the place would be filled 100% of the time. So it ended up not being too big of a deal, but still was a little bit of a bummer just considering that, I did have to basically pay a full mortgage payment without getting any rent to cover that payment. The tenants are on a 15-month lease, and something that's really cool so far is that, they've always been on time on their rent, which I'm super grateful for. I have no reason to believe that I'll have any problems with them, and having good tenants is like one of the most crucial parts with having a successful, rental property. So for that, I'm grateful. So ultimately, like I said, I ended up buying the property in Memphis, Tennessee. I made a whole video kind of covering the backstory of how I ended up there. I weighed out a bunch of different cities and, weighed a couple different strategies as well, like maybe doing an Airbnb versus a long-term traditional rental property. But the reason I ultimately landed on Memphis, Tennessee was because it was one of the only places I could find a property that would break even in terms of cash flow. Everywhere else I checked, I would be coming out of pocket like $200 or $300 a month, depending on whether it was a good part of town or a bad part of town. So Memphis just seemed like one of the only places that I could kind of find that break even, make a little bit of cash flow while still buying in like a decent neighborhood of the city. One thing I definitely do differently going forward is if I'm going to buy in a city like Memphis, Tennessee again, where it is famous for real estate investors for its cash flow, I actually need to find something where it does have significant cash flow. My property only cash flows about $60 a month or even less, which I'll get into. But, I'm not beating myself up too much. I bought in a good neighborhood of Memphis where the cash flow was a lot lower. I just felt like I could get more cash flow in a worse neighborhood, but the risks would be higher of like, default and evictions and late payments and stuff like that. So I do think I was smart in that regard. But again, if I was going to buy in a city like Memphis at all, I think it needs to have a lot more cash flow. I don't think it's really going to break the deal, but I'm just a beginner. I'm a rookie getting into this. I knew I was going to make some mistakes, and I'm just kind of glad that, I'm getting this over with, this kind of uncomfortable part of sucking at being a real estate investor. And I know eventually I'm going to, learn all the tricks and knowledge I need to, be really successful in this space. Also, one other thing that's cool about the fact that I was really particular about the neighborhood I ended up buying in Memphis was that, like I kind of made a joke about earlier, I did sort of buy at the peak of the real estate market. It did continue to go up a little bit, my specific property, based on Zillow and Realtor.com, Redfin after I bought it. But, the median home price in the city has definitely dipped since I first purchased it. But my property being in a good neighborhood where I think it has a little bit more desirability has actually held its value pretty well. So that's one thing I'm stoked about. It's a little bit, I think it's still worth a little bit more than I paid, which is nice, but I was kind of accounting for the fact that it might, dip in the short term. And, in my eyes, as long as the rent covered the mortgage, it wasn't going to be too big of a deal as, I assume in the future it's going to rebound and do a lot better. Something else I want to talk about is how my projected cash flow that I thought I would get, I didn't actually end up getting that. There was a few expenses that I, missed and didn't really account for. So I'll be sure to kind of, take those into consideration for future properties. But so one of these things was that I didn't account for the fact that I would have to pay the utilities when the place is empty. I know that sounds dumb, but it's just a little thing I didn't really think about. I figured, maybe it'd be $20 a month. It's not even worth writing down. But for the period that my property was empty before the tenants moved in and took over the utilities, it cost me about $157. So, obviously that's not much, but when your property only cash flows $60 a month, that definitely does, eat into your profits a little bit. The second thing I didn't take into account was, and this is something that's pretty typical with, almost all property management companies, is the fact that they typically will take about half the first month's rent as a fee for finding and placing the tenant in your property. So I accounted for the fact that they're going to take about 8% of the rent every month. There are a lot of, expenses that come with property management I did account for, but I didn't account for this, placement fee, which was pretty dumb considering, if I only thought the place was going to cash flow $60 a month and it's costing me $650 for them to place the tenant, then I definitely should have realized that right there was going to wipe out my entire cash flow. In the end, I don't really think this is a big deal. Again, it's a lesson learned. If I have to put a couple $100, a year into the property to keep the expenses paid, I'm not too worried about it. There's so many other ways you make money with real estate besides just cash flow. I'm young at my age. I really think and hope it'll end up being a good investment in the end. Every month the tenants are paying down the loan. The property is typically going to appreciate over time. The rent is most likely going to increase over time. So there's lots of other ways that it's going to end up being worth it. But, again, I'm really a rookie at this. You get into the game. It's something I have never known anything about. I've just done research, finally pulled trigger. I knew I was going to screw up and make some stupid mistakes, but I'm not beating myself up. I've learned a lot, and now I just have a better idea of things to look out for as I go forward and purchase future properties. So another thing, even though I'm really happy with the Turnkey Company I purchased with, and I think they're a great company, if I ever wanted to buy another turnkey property, then I definitely would consider doing business with them again. But one thing I did miss out on by using a turnkey company is, such a big factor of making money in real estate investing is buying something that needs a lot of work for below market value, putting, X amount of dollars into it and having it be worth more than the total amount of money you're into that property for. So that's like kind of what they'd call a value add or forced equity. Like, you buy a place for 150 grand, you put 30 into it, and then the property is worth 225. So, that's something I didn't get to experience this first round, and I definitely want to start doing, more projects like that in the future rather than buying something that's just move-in ready from the start. I will cut myself a little slack on this considering the property is in Tennessee. This takes a lot of time. You need to build up a team of trustworthy, reliable contractors to fix the place for you. This often requires different, types of hard money loans and special financing for projects like this where your interest rate is a little higher. There's a lot that goes into it. So I'm not beating myself up. But, if I had gone ahead and decided to do that, I would have had a lot more connections out there now that I could have used for, future properties. So not a big deal, but I think I would have learned a lot more and probably had more upside potential if I would have gone that value add route. Even if I didn't, even if I lost money, I would have learned a lot more than I did from doing it the way I did. But overall, I'm really happy I own the place. It's, a lot of aspects of it didn't go to plan. It's definitely, kind of a turbulent time in the real estate and economic world, but I'm a beginner. I knew I was going to screw up and make some mistakes. Whenever, you do something new, you're going to screw up. You're going to make dumb mistakes. And I'm just happy that I kind of got the first one out of the way. I learned a lot, and I'm ready to continue getting better as time goes on. It's just, I almost think the hardest part of starting anything new is that initial part where you literally have no idea what you're doing and you're just trying to wing it and make it work as best you can. So again, yeah, really happy I own it and did it. It's a cool thing, and I'm just excited to get better as time moves on. It's just such a cool concept to have a place that is entirely paid off by the tenants that live there. It's like I've got this account allocated to the property where, at the first of the month, the mortgage payment, gets pulled out of it and it goes down, and then the rent comes in and it goes back up to right about where it was. It's just a really cool, thing to witness, and it makes me really excited to continue learning more, buying more properties as time goes on, and kind of just master this game. Thank you so much for watching. I put as much effort as I can into these videos to try to make them as helpful as possible. I truly believe that the information I give here for those who listen and are interested is valuable and can be helpful to a beginner. So just really appreciate the support and the fact that you're taking the time to watch this. Make sure to subscribe, like, and yeah, definitely leave a comment if you have any questions. I'd be happy to talk to anyone about any questions they have related to real estate. I'm still a beginner, but I do feel like I know enough to where I could definitely help somebody at an earlier stage in their real estate investing career. Thanks again. I hope you have the most fruitful, joyous day possible.